I'm joined by fixed income strategist John Wraith from Bank of America Merrill Lynch. Thank you very much for coming in to speak to us. So are these stress tests on European banks stressful enough?
Well, that's certainly a big step in the right direction. There's bound to be criticism. We don't know some of the details yet anyway in terms of, for example, assumed losses on real estate, commercial real estate and so on. So we'll have to wait and see what happens. It is also not covering over a third of the European banking industry, some of the smaller banks, which people have more worries about as well in terms of their ability to fund themselves. So it certainly helps. It's something that will make the situation better and is calming the markets already. But it's not the full answer, no.
So what more do they need to do then?
Well, I think, it is, as I say, it's a big step in that right direction. What more do they need to do? Well, essentially get all the information out there as much and as clearly as they can, hope the markets do stabilise. And essentially a lot of what the ECB and other officials have been doing is trying to buy time for these fiscal programmes to start having an effect, to see the data take a turn for the better.
It's interesting, isn't it? Because we're hearing that ECB President Jean-Claude Trichet saying that there's too much pessimism in the market about Europe's economy and that it's actually stronger than many think. Is this true? Do the figures confirm what he's saying?
Some of them do. The sort of real data, certainly from core countries, is pretty upbeat. And of course, it's the job of central bankers to try and keep confidence up. So in some ways, you wouldn't expect them to say anything else. But we still have some pretty big concerns about the overall structure of the Eurozone and the outlook for growth globally. And these stress tests will help out in that regard. But they won't give us...
And are the markets buying into his argument? How would you describe what's happening on the bond markets right now? Any sign of improvement?
Well, yields have stabilised. I mean, they're still very close to all-time lows, but the last week or so they have stopped falling as rapidly as they were, which is a barometer that there has been an improvement in confidence levels. But clearly, until the situation is fully under control, and not just in the Eurozone, but worries about the US, for example, are allayed as well, then bond markets are going to stay well supported and yields are going to stay low.
And you talk about the situation stabilising. The International Monetary Fund has said that the ECB should perhaps step up its bond buying programme. Is that inevitable at this point?
It could well be, yes. The amount they've done so far has not exactly suggested that they stand full square behind the programme. And for other investors to get involved in some of these riskier debt markets, they need to have confidence that the ECB is also fully engaged. So at the moment, things do seem to be settling. We'll see how the stress tests come out. But it may well be at some point that nervousness returns for a variety of reasons, and the ECB needs to be ready to do whatever is necessary if that happens.
And when we speak about whatever is necessary, presumably that involves a strategy to deal with banks that are undercapitalized to help those weak banks, right?
Yeah, I mean, that's one of the questions about these stress tests. As I said before, a third of the industry is not being covered. We don't know some of the details of how they're being stressed. And if some, as is likely, need to be recapitalised, potentially to quite a large degree, how is that going to happen?
And what is the best solution, given that European governments are dealing with mounting budget deficits themselves? Are they really in a position to be injecting cash into banks?
Well, it's questionable. And we have the SPV in theory in place. We don't know yet how they would issue bonds, what rating they'd have, and so on. So there are still a lot of questions out there which need to be answered, but at least we're trying to clear some of them up anyway.
John, thanks very much. Good to talk to you. John Wraith, fixed income strategist for Bank of America Merrill Lynch.